What is going on, you guys? My name is Alex, and I'm a 22-year-old trader attempting to master the stock market to potentially one day join the very few who make a living out of this. So my question for you is, you want to get rich, right? Like everyone wants to get rich, I assume. But you want to speed run your way to riches. Well, let's take the game Tetris, for example. Tetris is a competitive game that is known for its speedrunners, so people actually compete and win championships because of their ability to speedrun the game and reach high scores. You might be wondering, so how do they actually get to, well, speedrun the game and get high scores? It's very simple. It's all about technique. Obviously, there's more to it than just that word. It's deep. It's very deep. But I'm just going to say this, that these guys really focus on a technique. They master that technique and they repeat it over time. And over time, they reach the championship and they win. They win a lot. And winning is subjective. Might as well just say getting rich is subjective. $10,000 could be rich, for some people. $1 million is rich. $10 million probably isn't rich for the ultra rich. So again, getting rich is purely subjective. So I'm going to try to explain to you guys my strategy here as objectively as possible, speaking about just mainly in percentages and not really getting into the dollar figures here, just because, well, again, it's purely subjective. The people that play Tetris, they don't cheat their way to riches. They don't gamble their way to riches. They just simply stick to a specific strategy and they just do it repeatedly over and over and over until they become masters at it and it becomes easy to them. So that's the whole point of this right here. I'm going to explain to you guys a strategy that could yield a high percentage rate and every single trade. Of course, there is a potential you could lose a lot of percentages, but that's why I'm going to recommend something very important. I'm just going to say it. Don't risk any more than 10% when you're trading this strategy. You will go on losing streaks. Keep things at a minimum. Risk only 10% max. I mean, ideally you would risk 5 to 10%, but max 10%. You could risk more, but you would be pushing the line at that point. All right, since we're talking about speed running, I am going to try to speed run this strategy, since it is a pretty complicated strategy. Even though it's a rough draft, it is a little bit long and complicated, so I'm going to try to go as quickly as possible. But if you feel like you missed something, again, this is a Discord. Everything's in my Discord here, completely for free. You can just join. So as you may know, the previous swing trading strategy on this server is a passive income strategy. It's built and designed to generate small amounts of returns. On average, it generates around 7% a month, and this is on good months. For extremely large accounts looking to keep their money safe and with minimal risk, the first strategy is essential in your arsenal of strategies. I recommend trading a maximum of 3 strategies at a time. In fact, I don't even think I can handle 3. As of right now, I only have 2, but 3 it would be the maximal, I think, for me. The market works in cycles and seasons. Sometimes one strategy will work better than another. Your goal is to recognize this and switch to your other strategy when this happens. This is why having multiple strategies is key. You have variety and options when you have multiple. Pick your 3 strategies and trade them for life. Become a master of these 3 strategies. So this new strategy, the one that we're going to talk about today, is built and designed to generate large amounts of money, as every trader will have the potential to generate anywhere from 20% to 300% return in some cases. And to be honest, there is no cap to how much money you can make in this strategy. Sometimes I've seen on rare occasions stocks will go up thousands of percentages on really rare occasions, to be honest. But you want to position yourself to really get as much of those percentages as possible. So that's the whole point of the strategy here. And this is only from one trade. So all this, you could get this much returns in only one trade. This is why it's especially important to pay attention to the risk management part of this strategy, as huge returns come with the risk of losing big as well. This also goes without saying that this is a rough draft, like I said in the beginning. A foundation, as time goes on and trades are placed with this strategy, I will gather data and use that data to see what works and what doesn't. This strategy will only improve over time. This strategy will complement the first strategy very good, as the other strategy is more conservative and this is more aggressive. You can flip in between the two or use them simultaneously like I do. With that being said, here's a perfect example of the system play out, which yielded a 90% return on this specific trade right here. So I'm going to go over the summary real quick before we look at the chart. This is again kind of the same thing, just a little bit more in details. So criteria 1, we're looking for the top gainers of the day, aggressive elephant daily candles. Criteria 2, explosive volume. 3, resistance. So resistance needs to be broken. There needs to be a level of resistance and it needs to be closed, or it needs to be broken, meaning that the price needs to close above that resistance level. Range, similar to resistance, elephant needs to close above that level. Criteria 5, downtrend. Do not buy stocks that are in a downtrend. Stocks in downtrends will typically and heavily be shorted on the first aggressive green day. So don't short stock or don't buy stocks that have previously been on a downtrend. Even if the candle that you're watching is an elephant bar, I recommend just to avoid those completely. Uptrend, slight uptrends before elephant bar is good. So sometimes you'll see that the price is slightly going upward right before the aggressive bar. Those have been pretty good. So moving averages, elephant bar must close above the 10, 20, and the 50 simple moving average. Strong and real buying will be confirmed with the moving averages. Hard stop loss is set to 50% mark, to the 50% mark of the elephant's body candle. So I think it's important to note that there is no limit order or limit hard stop per se that is set in the 50% mark. Like I'll go into this in a little bit, but there is no hard stop loss per se. It's kind of a mental stop loss, but if the candle does close below the 50% mark at the end of the day, you must close that position. Trailing methods. So here are your trailing methods. You could use the 10-cent moving average. You could use reversal bars or prior bars low. Any close below the 10-cent moving average will be an exit. Topping tails merit full exit. Prior bars lower and prior bars low. So these are the things that you could use as trailing methods, whether it's a trailing profit method or a trailing stop method. Although I don't use trailing stop method, I should mention. This is strictly only for trailing profit. So profit target, strongest level of resistance, the next strongest level of resistance, or if there is no form of resistance, you could use a 1 to 2. So let's say you're going with $500, you could just aim for a typical 100% return and then just sell 50% of your position right there. So any target will be a 50% sell only, unless you get stopped out with the reversal bar or the 10 simple moving average, whatever it may be. Trailing profit methods like that just merit a full sell, but with targets, it's only a 50% sell. So scaling out, again, first target, sell 50% of shares only. This applies only to targets. Any stop, trailing, topping tails, all merit full exit. Entry and exit times, ideally you would enter during the last couple of minutes of the day. So preferably just 12:50 to 1 would be a good time. I personally trade around 12:45, but that's only because I have a responsibility to share with you guys the trades that I took that specific day. And maybe you guys will want to copy me so you guys could have some time to trade the same trades that I took pretty much. So the heat map, this isn't really something I consider, although you could use it. I mean, maybe it will come in handy later in my strategy once the strategy is a little more mature. So the heat map overall, is it a red day or a green day? Obviously you'll sell on red days, you'll buy on green days. These are important rules over here, some guardrails to keep you from blowing up your account. Assess your account value. So maximum risk is only 10%. So if you have a $5,000 account, you can only enter a trade with no more than $500. That's 10% of the 5K right there. I should probably explain this a little bit more thoroughly, but this just means that you can only enter the trade. So if with $500, so let's say the stock is worth $1, you could only buy 500 shares of that, no more than that. Minimize exposure. I don't use this, but this is something that once I've used this strategy long enough, eventually I will have to implement something like this. Minimize exposure, only hold 3 trades at a time max. So 3 trades is good enough. Be picky, not greedy. The money will eventually come. So with that being said, let's go over on how this looks like on a real chart here and a real life example of the ideal setup right here. So we have the aggressive elephant bar, and if you don't know why it's called an elephant bar, well, this is why. It pretty much engulfs all the other previous bars prior to that. But you have the aggressive bar right there, and then the aggressive volume, explosive volume down here. So as you can see, prior to that aggressive volume, there has been pretty much no volume. So explosive volume, aggressive white candle, and then here we have some form of resistance that is broken. So this candle is actually closing above the resistance level, which is ideal. So we take long at the end of the day. So ideally you would enter around right here, having your stop loss at around the 50% mark of this candle, which probably would be somewhere around right here. Not really. So I don't know the specifics of where it would have been, but it's roughly around right here. And this is why we don't have hard stop loss, because if we did have a hard stop loss, let's say this candle right here probably would have been a little bit lower over here. It definitely did not close down here. It closed way up here. So if we had a hard stop or a limit order on the market right now, we would have gone out and we would have missed this whole run right here. So you don't want to set limit orders. You want to just have a mental stop, wait at the end of the day. If the candle did close, take your loss. If not, then just keep holding it. We ran up a couple of days afterwards, right around 80-90% right here. So we have 4 arrows here pointing at the spots where you could have taken some profit or just exited out of the trade for other reasons. But the first reason just being an emotional reaction. Maybe you got overwhelmed and you just decided to take some profit. I mean, there's nothing wrong with that. You just made an 80% return right here, or I think it was 90%. I'm not entirely sure. So I can't blame you for wanting to take some profit out of the table at this point. Although I would say that you have to leave at least 50% in the position at this point, simply because you never know if it could continue going upward a couple of other 100%. So you want to position yourself to really squeeze as much limit as you can from this stock right here. And the way to do that is, well, first of all, don't get overwhelmed. Just remain calm and get out whenever you really need to, which is going to be these prior arrows right here. But for whatever reason you decided to exit, that's completely fine. Just remember to keep 50% of your position in the game. So the next arrow is pointing at a reversal bar. So this red arrow is pointing at a reversal bar. Reverse bar is pretty much, well, it's a bad thing. You don't want to see this, especially if you're trending higher and then you see this. This is essentially a reverse bar. In other words, the topping tail, commonly known as a topping tail. So you don't want to see that. You want to exit it out completely at this point. The next example that you could use is simply a crossover over the 10 simple moving average. So this is a 10 period simple moving average. The first crossover just merits a full exit. So don't scale out of this, exit out completely out of here. But for whatever reason, you're still in the game, even though you've already broken your rule that you should have exited out in the topping tail. And if you didn't, you had to exit out on the 10 exponential or the 10 simple moving average. But for whatever reason, if you still are in the game, you would have already broken your rules, but you're still in the game. You just have to exit out no matter what at the green line right here, which is the 20 simple moving average, as you can see here. So you have to exit out at that point right there. And that's essentially it. That's all. It's very simple, very basic. Don't overcomplicate this thing more than it kind of already is. And I'm not gonna lie, I mean, it kind of is complicated, but don't overcomplicate it. Just keep things simple. But this is pretty much it. This would have already been if you would have exited out on the first and on any of these three over here, you would have probably made like an 80% return. Even in this case, in the worst case, you would have made like a 20-30% return. So that's not bad at all. So again, if you feel like you missed something, just join the Discord, take all this stuff, and again, you feel free to leave at any time you want. There's no pressure whatsoever. I will mention though that I do offer an apprenticeship. So how this works is you pretty much just come in here, you send me a description of your strategy, pretty much how I formulated and explain mine right here. You send me something like this, and I will analyze it, and if I think it needs any tweaking, I'll share my ideas with you. You could edit it, or if you don't want to edit it, you could keep it the same. But as the days go by, you'll take on trades, and you'll send me those trades, and I'll analyze them and tell you what you need to work on and what you don't. Pretty much just keeping you safe, keeping you from blowing up your account, and guiding you towards what I think would be profitability, or if not, consistency at least. So if you think that's something that you're interested in, again, just join here, send me a direct message, and I'll quickly reply to you. So besides that, I do offer a watch list for the elephant strategy. I do offer another watch list here for the breakout strategy as well. And I do also just send all the trades that I actually did take this day a couple of minutes before the market closes, just to give you guys some opportunity to enter. So go ahead and join. I'd be glad to see you guys here. And with that being said, I'm going to go over a real example that I'm currently holding right now, which is ZNTL. Again, I entered this. I'm just going to say that this isn't the best elephant bar. I mean, this could have closed a little bit higher, to be honest, and it would have been perfectly fine. It probably did, actually. I probably entered around 10 minutes before the market closed, so it did come down a little bit. It was looking good when I entered, or at least a little bit better. An elephant bar will probably be this second one right here. Really nice, consistent bar closing, probably like 90% of its low to the high. So that's a really good bar. But regardless, we broke some resistance level right here. We were ranging. We're in a sideways trend right here. We broke out, entered long, and then right now we are currently up like 90%. So again, there's no limit to how much return you could get on these. I mean, we're already up 98% right now. I'll probably take some profit out the table today. That'll be the 100% mark. That's typically what I'm aiming for. And I think there may even be some resistance over here. I don't know. Yeah. So realistically, we could target a little bit more like around right here. This would be a good target, but I'm getting emotional right now. So I could exit right now 50% of my account or 50% of my position and just let the rest run. I already made 100% return. What more do I want? I mean, people kill for literally 10%, 20% return a year. People kill for that. And I'm over here getting 100% return on these penny stocks right here. So if you really put things kind of subjectively, exaggerate things, let's say you had $100,000 account. I mean, you could imagine yourself. I could definitely imagine myself having 100,000 pretty soon. So once you have a $100,000 account, you risk 10,000 on this trade right here, you would already be up 100% right now. So you'd literally be up $10,000 on a single trade. I mean, that's beautiful. Let's take a look at a loser here, because of course you do have some losers. $83 on this. Again, I don't want to speak in terms of dollar figures because it's irrelevant. And I am paper trading here, so I wouldn't suggest you trade real money until you actually get a good feeling of how the strategy works, and then I would recommend you trade real money. So this was a weak candle, definitely a weak candle. Not only that, but we have a gap here, and as we know, gaps typically tend to get closed. So a lot of bad things here, and like I said, I'm gathering data over here. What trade was that? So FLYX, let's look at it. FLYX. So FLYX, if we look at, so all this is good. Prior range good, resistance broken good, 115 million volume good, above all the moving average, so that's great. But something that isn't great, and I don't know why I put great here, but this needs to say poor. So yeah, this is probably the worst thing you can see. 55% elephant candle closed. So what that means is essentially the candle closed at around 50% of its low to the high. So this is a poor. This is not an elephant candle, to be honest with you guys. So that's the importance of really gathering data and making sure that your trades are solid. After like 30, 40, 50 trades, you'll be trading almost flawlessly, to be honest with you guys. So yeah, this is a terrible trade. I'm going to definitely take a loss on this one, but this is only a 16% loss. So theoretically, I mean, not even theoretically, but I've seen stocks that go up like 100, 200% in a day, and then right away the next day they come down like 80%. So don't be surprised if the stock comes down aggressively against you. But this is why it's important to only have a fixed amount of number that you want to go in. For example, let's take a look at LV. And if we take a look at the market value, this is only worth like 509. So I'm not risking any more than $500, and the account is 5,000, I think. So $500 is around 10% of my account. So that's where you want to keep it, 10% max, and just keep doing that over and over. Of course, I will suggest this, and this is very important for you guys to pay attention here, because if you have a $10,000 account, you should be risking 10%, which is $1,000. And let's say you grow your account to $20,000. you don't want to keep risking 1,000. You want to risk 2,000 at that point. Over time, as your account grows, your risk should also be growing, and your profits will also be growing as well. So you want to keep doing that continually. So I'm gonna call it good there. Hope I got my point across. And if not, I mean, you can just join the Discord, and I'll gladly have a conversation with you through the chat, or just direct message me, whatever you want. I'll be here. Yeah. So I'm gonna end it right there, you guys. Hope you guys enjoyed. Hope you guys learned something. Actually, this, I think, is a really good opportunity. We do have another winner here, another example right here of us taking it long at this aggressive. This is a real aggressive elephant bar candle right here, by the way. So I don't know why my position is here and the kind of close a little here, but ideally you would enter at the end of the day. So right here, yeah, I don't know why it's like that actually, but you would enter at the end of the day, and just what I explained earlier, just stop loss at the 50% mark. But this is what you need to be looking for. Some resistance level has broken, aggressive bar. And if you ask what I'm looking at right now, well, today we have this was looking good earlier. This was looking really good earlier, but right now it's not looking too good because it's not closing above the resistance level. Not only that, but it's closing below its 50% mark. So that's probably not going to be a good one to trade. This one looks pretty decent. We're breaking above the resistance level. Elephant candle, explosive volume right here. What I would say is that it is an $8 stock. So probably not a penny stock right now anymore. So if you want to be looking for 100% return, I mean, this thing needs to go to $16. And for it to reach $16, I think is highly unlikely. You'll probably be looking at around 25-50% return max, I think. There's no saying. There's no saying how much return this could generate over the next days. But yeah, I don't know about this one yet, to be honest. But this other one right here is a really decent one, except for the fact that it is in a downtrend right here. So I try to justify a trend right here, or range right here, resistance level, but I just couldn't. This is not considered a range level right here at all. This is not looking good, to be honest. I mean, besides the fact that it is a nice elephant candle right here, and we're closing above all the moving averages. We're closing above some resistance level here, whatever. If you even consider this a resistance level, but we are still in a downtrend right here, and that's the only downside to this. So that's why I'm gathering data right here. I gather data on every single trade just to see if this actually is worth, if these trades are actually worth taking or not. But regardless, look at the 5-minute time frame too as well, and see if they're closing strongly. This one obviously has a lot of volume, so it's closing very, very strongly. It's already nearing the end of the day. I'm gonna give a I'm gonna send it out to the elephant candle watch list here, and just let the people know, that these are potential setups to trade. This one's actually looking pretty good now that I'm thinking about it. Besides the fact that it is in a downtrend, it's looking pretty good. Leave a like, you guys, comment, and subscribe. Stay focused.